My name is Nick B, and let's get into this week's futures overview. As always, starting with the Forex economic calendar. Monday, we don't really have red label news. Tuesday, not much either. Wednesday, CPI at 8:30 a.m. That's going to be a big one. Then Wednesday, we have crude oil inventories as well. We have the 10-year bond auction on Wednesday at 1 p.m. EST as well. Thursday, core PPI and unemployment claims at 8:30 a.m. Thursday as well, we have the 30-year bond auction. And then Friday, I mean, you have the consumer sentiment. That's just a survey of how are you feeling. But let's get into the meat of it, just the price action. All right, so I have NQ up here. Let's start with ES, and as always, let's do the multi-time frame analysis. Let's pull this up to the 3-year weekly. The daily is insufficient enough for me. Um, and let's start mapping out what's going on because these are some big moves here unfolding, especially September. I mean, wow, what a crazy start to the year. So I do want to point out the previous all-time highs. They were at 48.08 and a quarter. Let me fix that. 48.08. Okay, so that's where that was. Our all-time highs are at 57.21. And the famous question when we first begin is this bullish or is this bearish? This is still bullish, right? The trend is still bullish. We haven't quite invalidated that yet. I was just debating, do I plot the trend line from 3,500? I think that's a bit steep because that exposes possibly ES coming down to 48.08. Maybe that might happen, but I was focusing more on the bottom in October of and November of 2023 as a fine point of where to start. So I'm going to just remove that there. I'll start my trend line from here, expanded. I wanted to expand it this way here from the first point that we touched up on, but I have to shift it over to the wick of 51.20. Now on the weekly, what I see here is we did close below the 20-day EMA for 54.20. That seems like we have more downside to go. However, again, what is the trend here? Until we ultimately are below 2021 all-time highs of 48.08, this thing can still bounce off of here because what are we really selling off of? And really, it's the looming uncertainty of the market environment. It's just we don't have much interest to be buying stocks here. We don't have that interest yet. We're not sure of what the rate cuts hold for us. The election has a little bit of a play into this. You have geopolitics and proxy wars. You have Russia, Ukraine, Israel, and Iran. So you have all these issues, without kind of a straight cut answer on where is the money, where is the liquidity. And at the moment, it's just sitting on the sidelines. So all I can do in this moment is just focus on the price action itself by identifying what floor are we in, what are we doing, and what is the trend. So with the weekly, 3-year weekly, this is still bullish very much here. This would be considered our primary trend line. So long as this trend line holds here, we should be able to continue to recover out of here. At worst, maybe we come on down towards this level of 53.40. Maybe we'll have to take a look at this on the daily, but again, I'm not a fan of the fact that we are below 54.20. If into this week for whatever reason price can manage to close and stay above 54.20, there may be more upside due for us. Again, we have some inflation data coming out. That's going to be a bit important. But it also, at the same time, doesn't seem like the Fed's battle or the market's battle is with inflation. It's been cooling. We can agree to that. So what's left is just the price action here. I do want to say there may be a little bit more downside from the spook that we had last week into Friday's close, where we had another hefty drop. And enough yapping. Let me bring this down to the daily. Okay, so the daily, I could place my trend line from when was this? From January 2024 up until these points, and you could see it actually stretches along very nicely. Let me zoom in on that 1 second. NQ is going to be more fun. ES, I'm just kind of going over the broad side of it. All right. So right here from the beginning of January 2024, let me see how this trend line stems, because we touched up on one point right here back in our March pullback, our March-April pullback of 6 to 7%, and then we ended up bouncing. Then we had the correction starting from July into August, where we came down rather aggressive, but still the candles on the daily ended up closing above this trend line, so that counts as point number two. And the question for me this week is, are we going to bounce off of point number three, or is this where we're going to come down to our 200-day EMA on the daily and bounce off of there, stemming from the original bottom that began in October, November? I'm definitely, especially with last week's kind of breakdowns and all that choppery, all that uncertainty, I'm definitely leaning towards a little bit more downside just before we get upside. And here are the levels I'm looking for. First and foremost, the first level I'm looking at is 53.40. Can we get down to, well, really 53.30? Can we get down to 53.30 and bounce off of it? If we do, we're going to have to retrace our ways back up to 5400. 5420 is going to be that turning point for ES. If and when we get above 5420, that's going to expose us to the previous lower highs of 5500, well, 5490 to 5500, which was the original breakdown level for us. And if we can get above 5490, 5500, we can talk about more upside. Let's talk about downside. Let's say we are to break and end up below 5400 into Monday. And let's say 5400 continues to serve as a resistance. Your next target is 5330. Now you get a break below 5330, you're going to start to spill over below 5300, and you're going to work your way down, probably back down to 5200, and that's going to be very, very key for us, whether it's on the daily, on the weekly. Can we hold 5200? That's what I'm assessing here. If S&P decides to break below 5200, oh boy, are we in for a ride, because we have room then to come down towards 5120. Below 5120 exposes us really down to a free fall. I would say down to even 5000. 5000 would be a very realistic downside target. Below 5000, I'll go a little bit more in depth on it. Below 5000, 4960 is going to be your first target to the downside. Below 4960, you're looking at 4900. Psychologically, work your way below 4900, you're going to come up on the previous higher lows of 4850, and if that fails to hold, well, 4800, the all-time highs of 2021 are going to be right in our midst. But again, the question that we are looking for, is this trend bullish or bearish? At the moment, it still remains bullish. So it's going to be in my best interest this week to see how much of a dip can we get. If it holds the area that it doesn't, I would much rather be buying at the supports of the trend line, not just because we're coming up on a previous higher low. It's the trend lines mean something. As long as price is above these trend lines, the trend continues. Now, if the trend line breaks down, okay, great. Then we have our answer to the downside. We're breaking down. The tough part is going to be the intraday zones, and that's something I need to break down now to the smaller time frames. I'm going to get rid of this trend line here that we plotted on the weekly, because from the daily, this is going to be doing the work for me for now. I know with this trend line that 5200 is that invalidation level for upside. So I can remove that for now. I want to take a closer look at what floors are we in between on the intraday. What's going on over here now? Because again, we've identified the threshold. To reiterate, below 5200, it's over. We're going lower. I don't know what really could come and save it, but we'll have to see with time. But on the smaller time frame, I guess into this week, ideally get me to 5300, maybe scare us down there and buy us back up towards 5420, close us above 5420 for this week, and the bull market resumes. So let's take a look at this on the 4-hour. Okay, 4 hours really nasty. All right, so we had this massive floor from 55.60 up to 56.70. The more recent floor we were really in between is 55, oops, I forgot to change it. 1 second. 55.60, and the floor was 54, really 54.90. Where is that level? Why 54.90? I keep talking about it. And 54.90, if you guys remember, was the contract rollover support for us back in June. Back in June, it's held us up. It kind of broke down last time we created lower highs to come down to a correction territory, and here we are again below 54.90. You can see how nicely also on the 4 hour, all the previous higher lows that we have up here, let's identify those because those are going to be our subjects of interest too. So right now, the first higher low I see right here, 53.70. Get us below 53.70. That's going to expose us down to the floor of 53.45, very close to where we identified 53.30 as that daily support. And below 53.45, 53.30, you're really going to be ending up at 53.20, 53.18, 53.20. Below 53.20, you know you're going to see 5300. And again, that's also a bit of a problem because that stems to where our daily trend line is. That's our threshold here for the trend. If we break below 5320, ultimately, it perfectly, this trend line lines up to where my higher low that initially started this bounce higher. Maybe we're just retesting the breakouts because of how fast we were able to recover this correction. Maybe that's all this is. Maybe not. And we'll have to see again with the breakdown. If 5320 decides to break down, well, you have all this room coming straight down to, well, it's perfect. 5200. That's where these higher lows are. And 5200, as we've gone over, that's going to invalidate this entire trend, and we're definitely going to be shorting. For now, out the gate, let's see if we can get a retest of the breakdown up towards 54.90. Maybe that could be a shake and bake. It's going to be very tough to try to intraday trade this. We'll have to go for something maybe like 10, 20 points at most, unless we get a nice buildup of the next floor that we're in between. Currently, again, this is just a breakdown. So all the higher lows from back in the beginning of August, they're going to be levels of interest. The first area I would like to go ahead and place an alert at is going to be 53.70. Once 53.70 breaches this higher low here, well, I know we would be in business to possibly come down towards 53.20. 53.30, 53.20, that's all going to be levels of interest. In terms of upside, again, it's a bit different now that we are on the 4 hour. It's not so much that I'm thinking about the 54.20. That would be a nice guidance level that we can take a chance on if ES is breaking above 54.20. Okay, 5400 stop, and your target is going to be 54.90. But what are the confirmations for us to really get out of here? And that's where I have to resort back to my Dow theory of where were our previous lower highs. So lower high number one we can see was at 55.30, and then lower high number two is perfectly at 55.65, which was this floor support here for quite some time, about a week or two. So my alert really to the upside, now that we're breaking it down in smaller time frames, to get continuation in trend. Again, what I'm looking for is continuation in trend. It would have to be 55.60. So that's going to be my second alert, where, there we go. 55, we'll do 55.60. All right. Okay. Here in between, again, let's break this down to the 1 hour. I mean, market's almost open, but let's take a look here. So you have a floor, basically, a new lower high of 54.35, and you have the lows of 53.93. So on the smaller time frame, you can assume that if we fail to get above 54.35, we will not see 54.60. And why 54.60 when you were just talking about 54.90? 54.60 on the smaller time frames, I like to pay attention to where my 20-day exponential moving averages and as the first base of resistance. And in this case, my 20 days at 54.60. So ideally, in this chop zone, this is going to be a chop zone now because the move completed itself. This broke down. We're unless we clear 54.35, we're not going to see 54.60. And if we see 54.60, well, great. we can start the build up towards 54.90, 55.30, and then 55.60 again will put us over the top towards the all-time highs again. Now let's talk about the downside in terms of these smaller time frames too. That first higher low is at what? 53.70. So if price into open into Sunday or Monday decides to come down to 53.70 and break below it, you're going to see possibly you're going to come up on 53.50. 53.50 is that higher low in this area here, and I think it's perfect for a 20-point target. The question then at 53.70 becomes, where are you going to put your stop? Unfortunately, the risk to reward ratio to execute anything here for me is not very enticing at all. It's more of a chance taking. And that's okay if you go light position, you test it out, you have a nice light 5-10 point stop and you're targeting 20 points. If you get that 20 points breakdown and momentum continues, well, you got a heck of a trade. But I'm not in the business of chance taking. I'm in the business of where is trend going. I want to know where the market is going. So with all these levels in price action, points identify themselves, get me below now 53.50. You're going to see 53.20. Again, all roads lead me to the breakdown of 53.20. So if and when 53.20 decides to break down, I wouldn't mind a short entry there. Again, at most, I would be willing to risk maybe 30 points on ES because the downside below 5300 stems to about 8,000 points to the downside. Now, that's a setup I can take. Or again, another setup, that's one setup to the downside. Or the more enticing setup to the upside, on chance it's 54.20, but really the more I look at it and the more I kind of assess it, the better off I feel executing at 55.60. You put a 20-30 point stop because above 55.60 you have all this room to retrace back up to the highs of 56.60. Another possible 80 to 100 points where you're risking, maybe 20, 30, 40 points at most where it's worth your time. Minimum 2-to-1 risk to reward ratio. So that's with ES. Unfortunately, as much as I would like to do something here in between, I can't quite come up with anything. I would have to break it down to the 5 minute and or the 15 minute. And we could do that. We could absolutely do that. But again, it goes into the question of, are you trading a setup or are you chance taking? On the intraday, things pop off quicker, as you know. So let's look at the chance that we can take on here. And the recent floor that we broke below is, as you could see, 54.35. Well, let's do 54.36. Okay, so potato, potato. Then you had your support over here at 54.10. And right away, you have a bit of a setup here that you may or may not take on. The problem is if you're going to go for these intraday moves, your stops have to be wide, and this is where it's gonna get interesting on NQ. For ES, okay, but for NQ, we'll get into that. That's going to be interesting. So what would I do here? Well, at first, it looks like at best, maybe we retest 5400, 5420 area. And if specifically the 1 hour candle fails to close above 5410, I would say, because that's the bottom end of this range, you short it. You put your stop at the last highs of 54.36 or 54.40. You're risking 40 points. And now when you're shorting it at 5400, your first target is going to be 53.70. Why 53.70? Again, we're just resorting back to what the higher time frames are showing us in terms of higher lows. Because when we're breaking down, I'm targeting previous higher lows. And when we're breaking out, I'm targeting previous lower highs. So in this case, that wouldn't be a bad idea. Maybe you get a failure to close above 5400, 5410 on the 1 hour. You short it with about a 20-30 point stop. Well, no, you can't. It might shake you out. You got to short it with a 40 point stop. And again, what are you targeting? You're targeting 40 points to the downside. That's a 1-to-1 risk to reward ratio. Again, still a setup. You can take that chance, but for me, I avoid that type of stuff. I rather not do it, or if I do it, I go at a half position size, something smaller than usual, just so I can weather these swings. With that said, let's talk about upside. Would you go long on the first initial break of 54.10? No, I would not, because if that 1 hour candle fails to sustain above 54.10, your probabilities of the trade reversing on you are tenfold now. Would I go long on a breakout of 54.36? It is enticing. I would consider it most definitely, but where am I putting that stop? And the first thing that leads me to believe to where I would put my stop is 54.10. Why 54.10? That's about 30, 40. I would put a 40-point stop or so. It's above the daily 20 EMA, which we know is 54.20. And if this truly is an intraday breakout, you're going to well, price is going to retrace its way back above the previous lower highs. You're going to go to 54.42, you're going to come up on 54.57, 54.60, and essentially work your way up to 54.70, get you above 54.70, you're going to 54.90. Before you know it, you just risked 40 points for a potential 80-point run up. That's a 2-to-1 risk to reward ratio on chance that you can take. That's a possibility there. Just covering all the broad sides of the scenarios we might come across. But on the big picture, really quick, this is important, just to reiterate, unless we get below, well, 53.70, yeah, as long as 53.70, that's gonna be that support. As long as 53.70 holds, we're gonna see a potential bounce back up. This was rather a rash pullback, a lot of selling pressure, and then again, you look at the volatility, you look at the VIX, you look at the put to call ratio, and you're just sitting there wondering where are all the sellers? This doesn't seem too much like panic selling, not yet. I'd imagine with a 6% drop into last week, I'd imagine that VIX at the minimum would be sitting at $26 to $30 levels, but we're not. We're at 22. Again, we'll see. We have open right now. Okay, so let's see. What are we doing at open? Gap up? Yep, gap up. Okay, wonderful. So we're above here. Let's see where this 1 hour candle closes. So that's with ES. Let's take a look at NQ. Um, well, hold on. I think I did a poor job of reiterating. So let me reiterate. Below 53.70, you're going to be exposed to 53.50, 53.30, and then ultimately 53.20 is going to be the green light where price is just going to just fall. You have no real support below 53.20, 5300, but really you're going to be coming down towards 5200. There's no real support here at all. And it's perfect because that would be a breakdown of the trend line. Okay, in terms of upside, again, something that would make me feel a lot more confident going long is get me back above 55.60. Get me back above 55.60. I'm good to go long. Everything here, very very tough to take on the confidence to do that. Although I do want to say, and again, this is no surprise, it's the perma bull in me. I do want to say this week ends up higher. I was absolutely wrong on last week. Absolutely, we chopped around and then we failed to break multiple resistance levels back up to the upside. And as you saw, it was sell the rips. But very difficult environment to pull that off. So I'm looking for clean cut levels. Let's go on over to NQ now. And let's do the same thing. We'll pull it up on the 3-year weekly. Let me just clear up the set. And I'll do the same thing similar to ES. I want to map out where my previous all-time highs were. Right here. What is it? 16,785. It was really 16,767, but I'll leave that alone. I just plotted on the wick. Okay, let's talk about trend line. Where is the primary trend line on the 3-year weekly? Is this bullish or is this bearish? I say it's bullish. And what I'll do, starting from 2022, is when this trend line kind of began, I'll trace it along the wicks. Some people do it the candles, but I like to do it from the wicks of the candles, the trend line. There's no right or wrong way to do it. And you could see how the primary trend, this is what we would call a primary trend, as long as price is respecting this trend line, we're going to continue going in that direction. The big question is, of course, are we about to have a trend reversal, a trend change, Or is this a big fluke from the uncertainty in the market conditions? And are we going to just bounce out of here? So with NQ, it's a little more clear. We can see here we are way below our 20-day weekly EMA. That is at 18,970. Our 50-day EMA is at 17,896. It lines up perfectly to how close we are getting to this trend line. So it leads me to believe, let's talk about the downside first. If NQ decides to come down this week down to 17,900. I was gonna say 18,000, but that's not enough. 17,900, and we get a weekly close below that or a daily close below that. Even a 1 hour close below 17,900 now exposes us down to the previous higher lows of 17,380. Below 17,380 is this the bottom of the correction, 17,350. I'm looking at this area here. So let's say 17,350. Really, that's going to be your downside target below 17,900. Below 17,350, you're going to be coming down to 17,1. And below 17,1, again, you're probably going to come up on the previous all-time highs of 16,767. Very close to the 100-day on the weekly, but I don't, you know, depends. If the weekly candle closes below this trend line, yes, I will be more open to us seeing possibly 16,800 to 16,500. Very possible. Let's talk about that. In terms of upside, really, you have on the weekly at least, you can see how this is a lower high, 20,030, and then lower high number two is 20,983. So in order for this trend to really continue higher, what price is telling me is got to get above 20,983. Of course, we're not going to leave all those points on the table, so this is where we need to break this down now to the daily and take a look. Okay, so the daily, I need to expand it just a little bit. We need some history here. Okay, I don't know why it keeps doing it, but stop it. Okay, on the daily, we are below the 20, the 50, and the 100, up to the 200. A lot of traders, a lot of investors, they're eyeing this 200-day level. Let's see where this is at. It is at 18,200. Perfect. It's so perfect because this is what we have lined up. If this daily candle ends up closing below 18,200 on NQ, you will come down to 18,000, 17,900. You will come down there. Now, if that daily candle or the 1 hour candle decides to close below 17,900, you will be, well, price will be exposed down to 17,700, 17,350. You don't really have any support below 700, 750. The next support you really have is just that fluke level of 17,350. And if 17,350 decides to break down, you will see the higher lows, the bottom of the pullback back in May of 17,100. Below 17,100, you will see the previous all-time highs of 16,767. What do we need to do to get back above to the upside? Ultimately, for the trend to continue, you gotta get above the second lower high. You gotta do it, but we'll be able to identify that better on the smaller time frames. For now, my big level here that I see on NQ that I have to place an alert at is going to be 18,200. 18,200 will be the threshold of whether we are able to bounce this week or we will see more downside. We need to break this down to the 4 hour. Okay. On the 4 hour, what's happening here? You could see we had a very nice recovery, right? Higher highs, higher lows, higher highs, higher lows. But as of recently, we began making lower lows, lower highs, lower lows, lower highs, lower low, lower high, another low. And this low just so happens to be right above the last higher low that we retested to get this run up. Let me zoom in a little bit more so you could see it. Okay, so it's this level right here, which seems like we want to go for it. So if we break right now below 18,370, you will probably see a bit more of a meltdown to last week's to Friday's lows of 18,330. Below 18,330, again, you're really going to come down to 18,200, which is the daily 200-day EMA. And again, if the 1 hour, if the 4 hour, if we end up closing below 18,200, look at this. You have no support up until the point of 17,900. 17,900, 17,800, below 17,800, you're going to come down to 17,700. So the question is, where are you going to put those stops? At 18,200, if let's say that 1 hour candle closes, where are you going to put that stop? Your nearest resistance level is going to be at 18,370. So does that mean we need about a 150 point stop for us to target roughly 100 to 200 points to the downside? Possibly, maybe to avoid the swings, but I think this is something the smaller time frames are going to help us combat because we are ways away from direction right now. I'm looking at these higher lows here of 18,370. If you're quick with it, if you're taking a chance on the 1 hour candle closing below 18,370, you short it with a stop at 18,410, I would say. So that way you're risking 30, 40. Nope, you got to put the stop at 420. Risk at least 50, 60 points. I noticed through the chop zones when you're getting a move and the Momo starts to unfold, you need about a 60, 50, 60 point stop to not get shaken out. And that's still a probability of 50-50. So again, the question is, where am I putting that stop if we break below 18,200? And unfortunately, what I've been thinking over is you can't have a safe stop. It has to be in the moment where you execute it. You place your dues, you place a 30, 40 point stop, maybe at most of what is what you're willing to risk, and you go with it. You target momentum. Unless again, you're willing to have wide stops of up to maybe 80, 100 points. And even if you do go that route, now to kind of adjust to this environment, you're better off dropping off your position size to half position size or something smaller than your usual position size, because at the end of the day, what you're doing is you're taking chances between these levels. For me, all I know is very important. If 18,200 breaks and if we close below it, I will definitely be looking to short to as low as 17,700, 17,800, and we'll adjust to that. In terms of upside, I mean, your only upside levels here is lower high number one, 19,150, lower high number two, 19,700. So until 19,700 breaks out on the lower time frames, I can't quite be confident in trying to go long here, even though as long as the daily trend line supports this entire move here, there is still a good chance I'll be trying to buy this off the 200-day EMA. And again, if the 1 hour candle closes below 18.2, fine. I'll give in. I'll look to short down to 17,800, 17,700. And if that fails to sustain, we're just retracing the previous higher lows that we're making. Again, given with the VIX's volatility, let's see, 2213 it closed out last week. We'll see where Monday takes us. This isn't very scary yet. We just have to figure out when is this uncertainty going to settle. And I know a lot of it is pent up and built up on waiting for these rate cuts. The more I'm looking over the data points, the more I'm thinking, dang, they might just do a 25 basis point cut and the market's going to throw a little bit of a tantrum. It's not going to be enough. Again, just educated guesses. We'll need to see at the end of the day what happens. So for downside, 18,200 is marked. I have that. And then for upside, again, let's break this down to the 1 hour. You have 19, really the lower highs of 19,000. That was a big resistance level for us. 19,000, 19,150. We could take a shot. We could take a shot at us coming up to 19.6, 19.2, 19.3, 19.4. There's not much resistance here at all until we reach the lower highs of 19.500. 19.500 breaks, that's going to give way to 19.6, 19.7. 19.7 confirms we're okay, we're getting out of here. For now, It's just a chance. I see 18,500. I don't trust it. I don't trust that at all. If you're going in on the chance of these intraday breakdowns, right? I'll have to break this down to the smaller time frame. Let's say the 15 minute. It looks solid, right? 18,5, 530 even. You could go long there. Your stop would have to be probably at 450 if I'm honest. Um, so you're risking 80 points, and then the potential for upside is above 530. Your next resistance point on NQ is the midpoint of 18,640. So you're risking 80 points again to make 100. That is the only way I see us not getting touched up by these intraday 100 point pops up, pops down. That is the only way with these one-to-one risk to reward ratios on chance and a smaller position size than usual. And I'll be honest, that rubs me the wrong way because at the end of the day, that's kind of delusional to say that that's going to give us trend and direction because it's not. We've identified what the trend and direction is and will be on the higher time frame. So again, into this week, given last week was a bit tough for me, I cut those losses as quick as I could and tried to not revisit. And I'll tell you guys, I was doing some back tests on the back end, and it's just not worthwhile. Signal side, it's not worthwhile. I want something cleaner where everyone can ride it out for continuation, and we're not getting it. The disconnect for me is I have to now put up a one-to-one risk to reward ratio with a smaller position size to go for what momentum pops and drops. Sorry, but that is not very attractive to me at all. Sure, we'll still be making our rounds. We'll still be making our taking our educated chances within the zones. But I also want to tell you guys I'll be a lot slower, especially that I've been getting it wrong a little bit too much lately. Not to be too hard on myself, but I need to give myself that breathing room because if I just keep going ham at it, I mean that's kind of not a good idea. I don't think that's going to lead me the right path. So I am excited for this week. Things do look great. I mean, we're very close to our supports rather than our resistance levels. We're coming up on the trend line supports where, again, most times, again, depending on the trend and the current condition of the market, they should hold up. The question now is, will they? And I'll have to see at 18,200 NQ. And for ES, really, I know I placed my alert at 5370, but it's 5320. If 5320 and 18,200 decide to break down, well, guys, I mean, it's been fun, but we're going to see a slight trend change. Trend change. Um, at the same time, though, I'm looking at just quickly to wrap this up too. At the same time, I'm looking at all the spaces we have to fill to the upside, where we had these drops and you don't have much resistance in between them. We might get a really nice juicy squeeze up, maybe to retest some of the points that we broke down of last week, for example like 5490 on EES. And for NQ, maybe we come back up towards, well, 18800's far-fetched. Let me see. Realistically, maybe we see 18,700 again. That's the last area we chopped around before we had this nice flush. So very possible we come up to the supports of what we broke down. And if 18,700 fails to hold, well, we'll look for specifically what you want to look for in the resistance level of 18,700 is how long does it go sideways for? If it goes sideways for about 15, 30 minutes, most likely the accumulation of orders that are now building up to reject because why can't we get above 18,700? And that's all. So 5490 and 18,700 are points of interest for me on NQ and ES as well. Um, and I'm still gonna go ahead and say that I say we see a bit of a hard bounce into this week. It's going to be tricky. We'll have to see just how low it can go, or if this was the worst of it from Friday. Because if into Sunday, into Monday, if I do not see us at these lows at all again, well, I'll be definitely more aggressive into buying breakouts or especially buying dips. That's what I'll be looking for. Other than that, I hope you guys have a solid trading week ahead. Nice and easy. Let's see kind of what the channels give us, and we'll go from there. We'll get our inflation data out the way, and the big week is going to be next week. Wait, is it next week? September 18th. That's not next week. No, that's in Oh yeah, it is next week. That's next week, Wednesday. That's going to be the big week. That's FOMC, Powell speaks. Are we going to get that rate cut, or are we good where we are? So until then, we'll see what we get. Have a solid trading week ahead, and I'll catch you guys into Monday.